this feels like the 51st state of the United States in a lot of different ways.
It almost could have been.
And
right?
it was for almost 50 years, right?
This and
It was a US
Guam and
territory.
Puerto Rico,
Yeah.
right? We actually should have been states and should have got voting
I
rights.
think more than 50% of Filipinos actually probably wish they were part of the United States.
I think things would have been a lot better.
Well, I don't know about a lot better, but maybe different. Yes.
Well, if they had, look, if the Philippines had voting rights,
Yeah.
it would definitely be a lot better. If Puerto Rico doesn't have voting rights, right? But it's really a U.S. territory.
It's a U.S. territory. That's right.
So if they don't have voting rights, then, you know, it's kind of like an afterthought.
Yes.
Right.
Yeah. Taxation without representation.
Exactly.
Like that. Yeah.
Isn't that kind of what we go through as expats?
We are taxed. Yeah. I mean, this is actually something Trump said he wanted to fix, by the way.
How so? I'm all ears.
I use a third-party service to do my U.S. taxes, but it's a 120-page document.
Dude, I swear to God, every year, December 15th deadline, right? Wait till the last minute. And I'm like, this is the most stressful time of the year for me.
Sure.
And then by the end of it, my tax documents are like this.
Yeah.
I mean, and you know, not only that, right? I mean, forget it. We know about the taxation issues. We're taxed everywhere. Well, sure, we get $100,000 tax exemption for being an expat, which is nothing helpful in our world. So if you want to be a businessman and you want to be an entrepreneur, don't be a U.S. citizen, because it's not just the taxes. Even like
it's the compliance,
right?
It's
so
the mind space,
like here in the Philippines and other countries too. Like I bank in Singapore, I bank in Hong Kong, bank in the Philippines. They will not take me for any financial products.
Zero.
Right. So
you're untouchable.
I can't invest in bonds. I can't invest in stocks. I can't invest in any money market accounts.
Unless it's with a U.S. bank.
Right.
In the U.S.
Right. And then so like other month, we were trying to create a real estate fund in Japan with some Singaporean investors. And those Singaporean investors don't want me
on the cap table.
They don't want me on the
bank account,
the shareholder stock, right? Because then they're subject to
FATCA,
IRS audits too, as well, because the company is right.
Yeah.
So it really limits my option.
U.S. person.
Right.
Yeah.
Have you been able to get around this?
We can talk about that offline.
Really? I need some help.
You need a wife.
Oh, right. Yeah. Everything always points to just get married to a Filipino. I swear to God, I can't tell you how many times people told me to buy properties. Just get married. You want to buy properties? Get married to a Filipino. And to me, that's not really a reason to buy properties or invest. But that answers a lot of problems, I'm sure, especially if you have kids.
Especially if you have kids, yeah.
Right.
Yeah, you can set up a trust very easily and put your kids on the shareholder document. And
right. Gotcha.
Yeah.
You know your wife's subject to U.S. IRS audits too, right?
She's not a U.S. citizen or a green card holder.
Doesn't matter as long as she's your wife.
I haven't seen that.
Yes. Technically, I just don't think they can enforce it. It'd be difficult to enforce.
That should be difficult.
But they'll go through you, because as long as you're married, obviously they've cut off every loophole, right?
They look for
right. So obviously your spouse is subject to U.S. IRS audits. Not sure if they can really enforce it though.
I have to double check that.
You should.
That's the first.
Think about it. That's the most common
way to do it.
Yeah. And why wouldn't they? Why wouldn't they suggest that?
Yeah, they just wouldn't have the jurisdiction.
Exactly. That's the problem.
Yeah.
Right. And really the only reason why they have jurisdiction to tax us is because of the U.S. dollars.
The U.S. dollar. Yeah.
Right. Because
the SWIFT.
Because
system,
every bank
has to
trade in U.S. assets.
Yeah.
Just U.S. dollars.
Yeah. And has
you don't comply to FATCA.
With New York Bank of Mellon. Yeah.
Right.
All these places. JP Morgan and everyone else.
So did you work on getting a passport anywhere else? Did you work on getting a Philippines passport or any other country? So it's like, I got a golden visa through Portugal. I think Greg did it through Spain.
Yeah, but he's residence.
All right.
By investment. Yes.
Yeah, which then you can qualify.
He has permanent residency in Spain.
But then after 10 years, you can qualify for.
I think so. Yeah, after 10 years, maybe.
Right.
Yeah.
Right. You just have to be savvier around the tax issues. And then this is a good thing about Trump. Remember when Trump came into power, he had I can't remember the exact policy. It was like the Jobs Act, the Work Job Acts, whatever. I can't remember the exact term. I wish you can Google stuff for me,
Jamie.
But anyways, basically it was bonus depreciation. You remember that? So okay, here's how it works. when that law passed, it basically said you can depreciate any asset that has less than a 20-year kind of lifespan.
Accelerate the depreciation
You can
schedule.
accelerate the
Yes,
depreciation.
More capital formation. You make you'll
Right.
invest in a plant and
So the
take more
obvious
depreciation. Yes.
Right. The obvious thing is you can write off all your equipment in year one, your vehicle, and then if you're in real estate, landscaping was depreciable under 20
Oh,
years.
really?
Even a lot of renovations.
Yeah.
Right.
Yeah.
So you can depreciate that up front 1 year. Then what happens is then you have a bunch of negative losses.
Yeah. On
right?
the first couple of years. Yeah.
Right. So
Carry
you
that over.
can carry that over
Yeah.
on future years.
Right.
So that's why I invested heavily on real estate.
I think real estate's the only asset that goes up in value while you can expense the depreciation of it.
Well, it's called phantom losses.
Yeah, sure.
Right. So
the building depreciates over 30 years, but it doesn't really depreciate over 30 years.
When you combine the mortgage interest plus the depreciation of the property, and bear in mind you're leveraging it, right? So you're putting 10 to 20% down, 80% is leverage, right? Yes. So you get to take the full amount and depreciate that.
Yes.
Right?
Yes.
And it works the same way as a car. So if you buy a vehicle for $100,000, you put in $10,000, you're depreciating $100,000 in year one, right? And so this is the power of financing as well, right? And so and then on top of that, if you can qualify for being a full-time real estate professional,
okay,
meaning that, you spent more than, X number of hours doing real estate related matter. It could be property management, real estate, whatever, investing. You can write off all of your other income. I mean, the losses from real estate
can go against the other income.
Right.
Wow.
Right.
Wow. Yeah.
That's handy. So like,
I'm not a U.S. real estate guy. I'm a very much Philippine focused real estate guy.
Have you not invested in the U.S.?
No, just public equities.
Okay. So maybe you should consider that.
Maybe I do. Yeah.
Right.
Yeah.
And so, but here's the thing. So because the U.S. can tax you on income for your real estate properties overseas, they have to let you write it off as well.
Okay.
Right?
Sure.
Because obviously if we sell our property in the Philippines, we have to pay capital gains tax to the U.S. if it's not offset, right? Yeah. So because of that, they have to let you write off the depreciation. Even if you're buying properties overseas here,
you can depreciate
it in the U.S. And you are in real estate. You are a full-time real estate professional. You just need to be categorized as that. And then, if you buy properties in the U.S., your depreciation is better because it's based on 28 years is the lifespan of a building.
Okay.
And in the U.S., typically building value is 80% of the total value, right? Land is
20. Yeah. 80,
by
20,
accounting, basic accounting standards, right? And then, so you have, and if you buy a property overseas, it's depreciated over 35 years, right? And then you have better financing option in the U.S. So if you add that all together, you need much better tax advantages in real estate.
Investing in U.S. real estate.
Right.
Yeah.
So some people say that
with plenty of demand and everything else, right?
So some people say you probably, most people don't get rich off of real estate investment, but people who invest in real estate use it primarily as a way to hedge inflation and for taxes.
Yeah.
Right.
That makes sense.
So
those are the kickers.
Right.
Yeah.
Right. So you use your real estate assets to kind of hedge against that.
Yeah.
Basically. But yeah, definitely. Now with Trump in power,